Hi everyone, welcome to the TBR Webinar series. Today, Practice Manager and Principal Analyst Allan Krans, Senior Analyst Meaghan McGrath, and Research Analyst McElwee and Catie Merrill will be discussing A Decade In, Cloud's Real Work Begins. Before we get started, just a few housekeeping notes. At the bottom of your screens, you'll see a series of buttons. From left to right, you can access the slides, audio controls, Q&A, speaker bios, and our survey. After the webinar, you will receive an email with a replay link as well as a link to view and register for other TBR webinars. If you have any questions for us, please submit them in the Q&A widget in On24. You may also reach out to us after the event at webinars@tbri.com. Thank you again for joining us, and here's Allan to begin.
Great. Thanks, Sarah. Thanks, everybody, for joining. So today we'll go over looking into 2020 and beyond, the changes that we expect in the coming year, and some of the market forces that are kind of directing the market in that direction. And so as we get started, we wanted to kind of look at, in summary, we really think that in a lot of ways the easy days of cloud are finished, and a lot of the harder work, both for customers as well as vendors, is going to get underway in earnest in 2020. And so on this slide, we're looking at kind of what's some of the dynamics that have brought us to that point where growth rates have moderated quite a bit for the overall market. We have some of the citations for public cloud overall. You can see that even just from 2018 to 2020, expecting a market-wide slowdown in terms of the percentage rate of growth. However, that doesn't mean that the opportunity is dwindling. We really do see more dollars in terms of customer budgets and significant growth on the vendor side in terms of growing dollars year over year as a result of those shifting customer budgets, making cloud even more of a significant opportunity for them on a dollar basis, and it's already a quite sizable portion of a lot of vendors' revenue streams. And so a lot of kind of what's driving that is partially, if you look along the bottom, some of the workloads that we've seen that are high priority for moving to the cloud and have moved to a large degree, kind of starting with a lot of dev and test in the early days, shifting to CRM, HR, lift and shift applications, so kind of modernizing the infrastructure for existing licenses or custom solutions was a big focus in just recent years. But then moving to more mission-critical workloads like ERP, looking at the suite-based approaches of Oracle and SAP for a broader set of enterprise apps, and really regulated data, but looking at that in terms of industry, a lot of those barriers are breaking down as we go over the last couple of years, and we expect that to continue for really any industry, whether it's healthcare or financial services, in data sets that are protected. Really, there's a lot fewer barriers to moving them to a cloud environment, and we've seen customers take advantage of that in our research, and we expect that to accelerate as those decision cycles come up. The other thing that overlays a lot of this is the shift from standalone services and use cases for a lot of the early implementations to mixed use cases with multiple clouds and some interconnection, making them hybrid, kind of in the middle from 2014 to 2018. And hybrid IT, we believe, is part of really what's driving this harder phase of growth for customers and vendors as the interconnection becomes the predominant method of architecture, and connections to a variety of different delivery methods within cloud, with on-prem, private cloud, co-located services, as well as traditional on-prem, all become part of that more complex environment for how customers are addressing the ERP and core solutions within their data centers that really kind of exemplifies hybrid IT. And so when we talk about cloud becoming harder, Some of the challenges as well as the requirements we believe are necessary to overcome them, we've listed over on the right. And so a lot of the predictions that we have will actually tie up under some of the things that we've listed there. So for complexity, as you have, not one or a handful of cloud services, but multiple, and they're working in tandem with on-prem assets and other clouds, the complexity is really, initially that was part of what made cloud attractive. But now with these enterprise use cases, it's brought back in that complex infrastructure that's required to support it. And so visibility and management through things like Kubernetes and multi-cloud managers and managed services are all part of how customers can overcome some of the complexity that's creeping into their environments and are looking to a lot of outside services many times to do that due to skill shortages, particularly with new technologies and cloud technologies. As we talk about kind of the interconnection and the hybrid portions of these solutions and how customers are using them, the networking requirements are a pronounced pain point and something that's increasingly addressed with some of the interconnection services from co-location providers. We've actually added coverage in that area due to the value prop that we see resonating with a lot of customers, even as they think about mobile requirements and the integration of cloud services down to the end user. There's a lot of networking that goes into that. So private network connections and interconnection is a hot area of focus and a value prop for particularly the co-location providers, but a lot of the private networking solutions, whether it's sometimes from cloud vendors themselves or other network service providers, that's all part of the picture of how customers continue to implement hybrid IT and overcome some of those obstacles. Integration through some of the platforms that are available to customers, but also from partners, whether it's alliance activity to pre-design solutions, as we saw with VMware and a lot of the major cloud providers, or from the SIs themselves. It's a major driver for a lot of that activity. And so, again, that's part of not just implementing a cloud solution, but operating one that's interconnected and meets a quality of service. Those are all things that customers need from outside providers to overcome. And then really kind of IT overhead being the last one. As data center usage has declined for a lot of customers, as they've shifted to cloud, there's consolidation to be done, as well as additional kind of middle ground solutions for cloud, whether it's private hosted solutions for certain industries or certain workloads, bare metal type services where they can dictate the performance, co-location options to consolidate data center and kind of offload, get out of the data center business for a lot of customers is attractive and kind of part of that overall cloud value prop of offloading some of the IT investment and operations. All of those things, I think there's more awareness for not just on the far end of the spectrum of keeping everything on-prem or moving everything to a public cloud environment, but all of the options that reside in the middle are really going to be sought after to fit the different niche use cases that customers have, because they're all different and not one solution fits all of those different situations. And so that's, those are some of the struggles and challenges that we see customers and vendors facing as we go into 2020. And so in that context, here are the trends that we're going to go over and some of our predictions for how they will impact the market. First is, for a lot of the leading cloud providers, they're facing a transition in leadership. Some have gone through it already, for instance, Microsoft, but others are going through that in real time. And so Meaghan will cover what those are and the impact that we think they have for those vendors in the market in general. Secondly, hits on the shift to hybrid overall and how partnerships are, going to be more important going forward than they have been for a variety of different reasons, including hybrid, but really for the business model in general. It's going to be a more important part of the business strategy for cloud providers to operate in this changing market. Secondly, kind of the shift to the all-in suites for a lot of the enterprise application providers and the trade-offs customers are making with best of breed versus best of suite. And then lastly, kind of the standout leader in infrastructure as a service, we believe is going to see a lot more competition going into 2020, and Catie will go over what that means for them and some of the reactions we expect from market leader AWS. So with that, I'll hand it over to Meaghan to hit on the first prediction.
Thanks, Allan. So as Allan kind of set up, our first prediction is less about sort of what's happening in the actual software layer or the cloud technology layers, and really focuses a lot on what's happened to the leadership teams of a lot of the players we discuss across the cloud and software markets, and what those changes mean moving forward, or at least what we expect they mean moving into 2020 and beyond. So I think just starting with the foundation of the fact that, 2019 was not different from other years in the sense that sort of there are high-level departures that happen at a lot of companies. Allan alluded to Microsoft sort of doing their changing of the guard just a few years ago. But what was really notable for us is if you kind of look at this timeline we've put as a graphic on the slide, right towards the tail end of 2019, there was this really close aggregation of shifts at the CEO level of really close competitors and challengers. And so that's really what we saw as sort of an anomalous spike that kind of started this train of thought for us. And so you can kind of see some of the names we've put on the slide, but I'll definitely dive deeper into sort of each of the events and kind of how they came together and how they're setting up changes for 2020. All of these departures were sort of within the CEO discussion, at least. They did have different catalysts, but they were really, at their core, all at least largely unanticipated by the market in one regard or another. And so starting with Oracle, the first event was clearly Thomas Kurian leaving towards the tail end of 2018, but sort of for this discussion in 2019, we're looking more at Mark Hurd's leave of absence, which was clearly unexpected. And so with that unexpectedness, it became really evident to us that there was really a delay in clearly articulating the succession plan that was going to happen sort of following Mark Hurd's passing. That was sort of the beginning of that was Larry Ellison mentioning that he had given the board 5 different candidates that he thought would be good prospects to fill the co-CEO role next to Safra Catz. But then we again didn't hear much after he made those suggestions. And so, like anything else, this drove speculation until Oracle kind of casually confirmed that in December that Safra Catz would remain the sole CEO of Oracle with Ellison's support to lead the company into 2020. But sort of in that pause that you can see between the Mark Hurd bullet and the Safra Catz bullet on the timeline, we did a lot of speculation. That was actually the time period when we published our predictions document. So some of the analysis in what the potential decisions could have been was made in our predictions document, and clearly it's been confirmed that Safra will be the sole CEO. But I just wanted to kind of walk through what our thinking was in that interim while we were sort of speculating what was going to happen. And so I think the first sort of glaring point was that when Thomas Kurian left a year prior, for one reason or another, that really created this hole at the president level in Oracle's sort of executive structure. In a lot of cases, many people thought, including myself, thought that Kurian would be sort of the successor to the CEO position when Mark Hurd and Safra Catz moved on. And then with his departure, that clearly was no longer an option. But Oracle, between sort of Kurian's departure and this year's events, Oracle didn't make much of an effort to fill the president role that would be seen as a successor. And so there was a lot of different questions about whether Steve Miranda, who headed up the application side of Oracle's business, or Don Johnson, who heads up the platform and infrastructure side of Oracle's cloud business, whether one of them would step into the co-CEO vacancy, whether Edward Scriven, who's sort of largely on track to become the next CTO, would step in, or if the two other candidates that I would kind of consider would be the EMEA and Asia lead and then Dave Donatelli, who really to me stuck out as sort of the prime candidate to succeed Mark Hurd. I think there are a lot of different points that can be made about sort of Donatelli's roots in the hardware business at Oracle. You can even go as far back as his transition from HP over to Oracle that was similar to Mark Hurd's. But especially in recent years, Donatelli has really sort of proved himself in being able to really comprehensively lead the go-to-market efforts for Oracle's full cloud portfolio. And that, to me, really positioned him as the stronger replacement for Hurd's sort of sales abilities that complemented Safra's focus on financial results and operational efficiencies. So moving forward, Oracle, now that we know in hindsight that Safra Catz will be the sole CEO for Oracle, again with Larry Ellison sort of remaining in his CTO and executive chairman position and working very closely with her, that still begs the question of sort of how will Oracle adapt moving into 2020 to backfill some of those gaps in Safra Catz's capabilities that were clearly complemented by Mark Hurd and really were the sort of catalyst of the co-CEO structure in the first place. So there's definitely some gaps there in Safra's capability set that Oracle will need to really tactfully address in one way or another. And that's amid Oracle being at really this critical point in its growth with regard to cloud at least, where its ERP business is sort of chugging along successfully. Well, I'll dive into SAP next, and I think that's really the clear sort of competitor for Oracle to be facing moving into 2020 and 2021 with customers refreshing their ERP suites. I think there's a lot of business that is up for grabs that Oracle definitely anticipates they're in the running for. But also with the last couple of quarters really being a critical jumping off point for Oracle's database business. Moving into 2020, they're really facing a time when they'll need to prove themselves. But ironically enough, Oracle's rival, SAP, is the vendor that we can point to say that they've proved the ability for a co-CEO turned sole CEO to be successful. And that was sort of the evolution of Bill McDermott's role at SAP. He was appointed as a co-CEO and then sort of took over the role in a sole capacity and by all accounts has been very successful in helping SAP transform from its legacy stronghold in the ERP market into a cloud vendor. And so it's, again, as I mentioned, kind of ironic that within a month of Oracle's first announcement of the change at its CEO level, Bill McDermott announced that he would be stepping down from his role as SAP CEO instead of renewing his contract. And so with that, SAP quickly appointed co-CEOs again, so Jennifer Morgan and Christian Klein kind of stepping into the role together, Morgan bringing sort of this US-based and sales and marketing focus, whereas Christian Klein is bringing sort of the German background and has more of a focus on products and innovation. So you can see in that sense that the split of responsibilities very closely mirrors kind of what Safra Katz and Mark Hurd originally sort of split duties as. And then again, sort of the comfort in this new CEO structure being that Morgan and Klein are both still sort of backed and supported by SAP founder and former CEO Hasso Plattner. So very, again, similar to the Ellison support that Safra has over at Oracle. So it's a lot of similarities, and those really only underscore the tight competition between SAP and Oracle, particularly in the ERP space. And that's a race that we really believe will only heat up in 2020. I mean, as SAP is really entering its first stages of really strong growth in the cloud ERP space, having sort of proved for a few quarters traction in its S/4HANA business. Morgan and Klein are really set up to undoubtedly have a successful, quote unquote, at least on the books, 4Q when SAP reports in a couple of weeks. And that's due to sort of the seasonal fourth quarter strength and S/4HANA upgrades, and really the partnership with Microsoft. But I think 2020 is going to be really the proving ground for Jennifer Morgan and Christian Klein as co-CEOs of SAP. They'll need to really show that they can continue what Bill McDermott has started in migrating the legacy ERP business to the cloud, and doing so with the help of partners. But again, in true fashion, there's going to be a new challenge in 2020 in our sort of view, and that is that SAP's former CEO, Bill McDermott, is now leading ServiceNow. So within 2 weeks of announcing his departure from SAP, it was announced that Bill McDermott would be filling John Donahoe's shoes as the CEO of ServiceNow as John goes on to become CEO of Nike. And so with that kind of throws a new wrench in things. It kind of doubles down, I guess, on what we would consider a smaller wrench that ServiceNow had started to throw into the market throughout 2019. And that is really the sense that ServiceNow is really, they're associated with sort of IT service management and different workflow optimization efforts, particularly at the IT level, but they've been working pretty hard on evolving that into improving line of business workflows or sort of different things like onboarding and financial close automation. And so you can see with some of those announcements that they've made prior to Bill McDermott joining the company, they're moving into what they're calling these gaps around traditional business applications, namely the ERP suites or HR suites of Oracle and SAP, as well as vendors like Workday. And so Bill McDermott really brings a unique and deep understanding of those gaps, or sort of the workflow disconnects that exist in ERP systems like SAP or within other enterprise applications. And so that's really where ServiceNow has identified its key growth areas. And I think until we really see the influence that McDermott's going to have in sort of this first half of 2020, it's a toss-up whether his guidance will help ServiceNow avoid innovating into competition with the functionality of suites like ERP suites or HR suites, or if his knowledge will actually steer the company into more direct competition with some of these vendors. And so I think that there's a lot to consider in terms of specifically what ServiceNow can do in 2020, and we have to consider that without a very strong foundation of sort of historical trends that we can base sort of our expectations off of. So I think it'll be a pretty volatile, at least first half to 2020, but I think 2020 in general is going to shape up to be a pretty interesting race in the application space. And so there's a lot of uncertainty, but it'll definitely play out to be interesting. And so with that, I will turn it back over to Allan to walk through our second prediction.
All right, so the second area it's related to the transition to hybrid that we talked about, kind of from the overall market perspective, and that we see, from the vendor side as well as the customer side for how they're going to use cloud going forward. And so that's driven kind of a change in the business model, specifically, when cloud first started in those early days as we looked at that graph. A lot of the sales motion and vendor strategy was focused on their own solutions. It was a direct-to-customer type relationship for AWS and Salesforce are the two exemplars that were early on in terms of growing in the space. And for them, it was a lot of direct sales. They took the enterprise sales model for Salesforce and kind of this new passive credit card type sales model for AWS and went direct to customers with a lot of their early engagements. And so partially driven by hybrid, but also driven by the desire to scale, partners are going to play a much different role going forward, kind of starting through last year and then continuing forward into 2020. And so we'll kind of go through some of the ways that we see that happening and how that's going to be a change for the market overall. So when you break it down into kind of two different sectors, really kind of the first one is on the solution side, how best to design technology to work complementary in tandem with different solutions, cross-vendor, and a lot of that takes place through a lot of the technology alliance partnerships. You can think of VMware is probably the best example over the last 2 years of partnering with AWS and Google and even Microsoft more recently to allow some of the VMware base to transition to cloud, use VMware tools, and run that in some of the bigger public cloud environments. So that's activity that wasn't made easy for customers in earlier days, and it's become pretty standard and a driver of growth for a lot of those vendors. We also think about, for digital transformation, kind of getting cloud solutions at scale for enterprise customers. They don't want just the technology. They want to look at changing business process and modernizing and reducing cost and driving new streams of revenue through the integration of technology with their core business. So all of that is, requires a set of services to evaluate the current process, look at change management, align the right tools from different technology providers and cloud providers into that customer's environment so that they get the benefits of, not just cost savings from cloud, but really a digital transformation that changes their business. So those SI partnerships are really important for the enterprise set, and we see significant amounts of money being invested by the larger providers, the cloud vendors, a lot of the platform providers over the past year and going forward are really going to invest to nurture those relationships so that they can pair services capability, which they sorely lack, with the technology that they can provide at scale and win some of those bigger deals with enterprise customers. And then, looking at distribution, so the legacy channel partners have been, kind of lost in this transition in a lot of ways for vendors that have kind of started from the legacy technology side. If you think about Microsoft is probably the best example in terms of that channel base and having that ecosystem built up. It's been difficult to transition those existing partners over to the new value add model for cloud solutions, which really is around either IP value add and doing custom development on top of the platforms, or looking at some type of managed service activity to round out the rough edges of cloud solutions, make it easier for customers to implement and manage. That's much different than the transactional relationship that they had selling a lot of the licensed on-prem solutions for Microsoft. And we do think we've been doing a lot of research in this area, and time again it comes down to when cloud vendors need to scale their sales forces. They've just recently kind of reached the tipping point of profitability for a lot of vendors with the existing model, and they cannot continue to add sales resources and prolong the direct sales model to different niches, geographies, customer sizes. It's just too much for them to invest in and do all themselves. And so that channel is becoming, another focus point for how they can continue to grow in a market where, at least in percentage terms, growth is more difficult to achieve. They need partners, a distributed ecosystem of partners to do that. And so, it's not the same. It's not, copying the traditional partner program. There's some tweaks for focusing on capabilities over precious metal tiers and emphasis on customer references versus just the revenue contribution from different partners. So there's a lot of changes going on, but this new channel model is emerging as an important way for the major cloud vendors to sustain their growth, and it gives rise to a new value add for a lot of partners that are transitioning from the traditional model, or born in the cloud partners focused on, usually they're focused on kind of a single vendor or a small set of vendors, but again, multi-cloud is what most customers are migrating towards, and then hybrid integration between them. And so having skills across a number of different technologies, we believe will be a defining factor for success for a lot of those managed service partners, cloud service providers that are growing kind of in that indirect tier of distribution that is really important for vendors going forward into 2020. All right, so with that, I'll hand it over to Jack to go over the next prediction.
Thanks, Allan. So historically, enterprises have adopted best-of-breed solutions like Salesforce Sales Cloud, Adobe Marketing Cloud, or Microsoft's Business Productivity with Office 365. And enterprises have used their IT teams to integrate the multi-vendor environment or look to an outside integrator. However, vendors have been improving integrations among their apps within their respective suites, which will shift the market from a best-of-breed to a best-of-suite product adoption. And in this market, vendors realize that it's better to win single product deals around their flagship offering and be part of a multi-vendor environment rather than to lose all revenue opportunity by pushing for multi-product deals. One example of this was the Open Data Initiative with Microsoft, Adobe, and SAP creating a unified data model. And between enterprises using those in-house IT teams and this cooperation among vendors, this has enabled customers to have greater choice in which vendor they use. However, best of breed has caused solutions to be expensive as best of breed comes to be, and SMBs cannot afford best of breed for all of their IT environment. It's also IT intensive, so SMBs tend to have smaller or non-existent IT teams, requiring them to hire a third-party integrator, which may be out of their price range, or have a non-integrated environment with data silos. And this still takes time for enterprises to create those migrations as well. So in this new shift towards best of suite, large vendors like Salesforce, Microsoft, SAP, Oracle, as well as smaller vendors like Zoho and Zendesk are building out and improving those integrations. Some of the ways they're doing this, Salesforce and Oracle are having a similar approach with Salesforce's Customer 360 and Oracle CX Unity. That creates a central point for data to integrate rather than being a data warehouse or repository. It creates or uses automation to integrate that data, whereas SAP is unifying its data on HANA. And while this is still underway, we're going to see best of suite adoption kind of increase as these are improved. And these native integrations create more robust capabilities and insights, which can only be fully exploited when using the single vendor's apps in tandem. And in terms of adoption, how we expect that to play out, we believe that TBR's customer research helps shed some light on that. We found that 70% of respondents are using apps from 2 or more vendors, and 52% of those respondents plan to increase the number of cloud apps in their IT environment, whereas 47% plan to keep the number of vendors unchanged. So Microsoft, Salesforce, and those other aforementioned vendors are going to attack those multi-product deals within that 47% of respondents. In terms of the broader market, we think that best of suite is going to be have the strongest adoption among SMBs first, and partially because of that pre-integration, which is attractive because of the lower cost, and they're able to use that without having the IT resources in-house, as well as the discounted pricing that comes along with purchasing a full suite. And from the enterprise side, we expect that there will be more widespread adoption in later 2020 or in 2021. That's partly because of vendor lock-in, which enterprises don't want to be dependent on one vendor. Also, enterprises have those large in-house IT teams, which enables them to adopt best of breed without having to worry about those integration problems. And the shift toward best of suite also increases pressure on best of breed app vendors, which we think we're going to see in the coming year, such as Workday, which has HCM and financial solutions, but so do SAP and Oracle, which offer HCM and finance alongside their broader ERP solutions, and those are going to be enhanced with integrations. So it's going to lead customers to go for the value add of the entire suite rather than the individual applications. And with that, I'll pass it off to Catie.
Great, thanks, Jack. So our final prediction for 2020 is that, put simply, competition against AWS will intensify, kind of continuing to build off the competitive angles we've seen vendors take this past year. To highlight this, the graph on this slide includes our own forecasts in terms of total infrastructure as a service revenue for 2020, and this includes both public and private cloud. So up to this point, AWS's early entry into this market has allowed it to emerge as the far and away leader, and it's even more so aggressively onboarding customers' entire IT suites to its infrastructure. So at a projected $35 billion in infrastructure alone, AWS will maintain its incumbency through 2020 in terms of the overall cloud market. But what we'll see is these vendors capitalizing more heavily on AWS's weaknesses and take more strategic approaches to attack the vendor on all sides. And I just want to quickly provide a brief example of how much of a threat AWS is in this space. Google recently came out and proposed an initiative to beat AWS and Microsoft in the cloud space by 2023. It's currently just conjecture and it's very vague. We don't by any means see this happening, but it just kind of helps. I think it's worth calling out. It puts this competitive landscape that we're talking about in perspective. But regardless, in 2020, we're going to be tracking the way that these different vendors, how they take different approaches and how these approaches stack up against each other and how they'll be used to target AWS. So the first approach is that we're going to see some vendors establish deep partnerships to displace AWS. And in this case, we're really talking about Microsoft. In fact, one of the key findings we found through TBR's customer research program was that many respondents favored Microsoft over AWS due to the strength of its partner ecosystem. A quick example is Microsoft's relationship with Oracle. In 2019, Microsoft struck a partnership with Oracle Oracle that emphasizes running Oracle apps and databases on Azure and Oracle Cloud infrastructure simultaneously. So we expect this partnership to be very competitive as Microsoft is expected to outcompete AWS for Oracle database workloads, and this will hurt AWS given this is one of the key revenue streams for Amazon Relational Database Service. And secondly, as we kind of touched upon, Microsoft and a lot of other vendors will continue to strengthen ties with VMware. In 2019, we saw Azure VMware Solutions come to market as a means of migrating VMware workloads onto Azure infrastructure. And so this is directly competing now with VMware Cloud on AWS, which is really starting to resonate with customers and has had a successful year in 2019. We also recently saw IBM Cloud for VMware Solutions. So, kind of tracking Microsoft, IBM, and even Oracle's relationships with VMware and how they'll stack up against AWS is something to look for in 2020. And secondly, instead of kind of going head-to-head with AWS, some other vendors will look to almost sidestep it as they become agnostic toward infrastructure provider and look to invest more aggressively at the platform layer. So you could argue that IBM placed a $34 billion bet on this strategy with its acquisition of Red Hat. In 2020, we'll see IBM chase more hybrid workloads with Red Hat OpenShift being an open hybrid platform that can run on multiple clouds and, freeing customers from being locked into one vendor. So because of OpenShift and, the acquisition of Red Hat in general, we're going to see kind of a lessening need for IBM to chase the leading hyperscalers. We're past the days of the SoftLayer acquisition when IBM was trying to go head-to-head in the market. So this strategy shift doesn't place so much pressure on IBM to kind of close that infrastructure revenue gap on AWS. And then secondly, Google Cloud is an example of a vendor also kind of taking a more platform-led approach through Google Anthos. We're seeing a lot of partnerships around Anthos take shape, specifically with infrastructure vendors like Dell, Lenovo, and HPE. We believe this approach will be successful in competing with AWS in capturing enterprise customers who want to utilize on-premise infrastructure and creating a hybrid IT environment. And so for both these vendors who are kind of making these past-led investments, with Anthos and OpenShift, they will continue to market their platforms as Kubernetes-based, which we think will become really critical in 2020 as we see demand for Kubernetes and cloud-native development increase. AWS is viewed more as a Kubernetes facilitator, but IBM and Google have really pushed Kubernetes to the forefront of their strategies so they can kind of more effectively take over enterprises looking to create a hybrid environment based on Kubernetes. And I think that concludes our 4 predictions. So with that, I'll hand it over to Sarah.
Let's see. So I'll read the first question. Feel free to submit more as we go. It says, thoughts on whether Google will spin off GCP, Amazon, potentially spinning off AWS.
This is Megan. I'll jump in with my thoughts on this and open it up to the team if anyone else has any other thoughts. This is an interesting question. I mean, it's an age-old question, considering sort of the idea of Amazon spinning off AWS. It definitely has some new updates, and I think Google being part of that conversation is an interesting new twist. So first and foremost, coming from sort of what I've considered the reality for the last few years is that I don't see Amazon voluntarily spinning off AWS. I now sneak in that voluntary caveat because clearly with some of the presidential election commentary going on, there's definitely a question on whether the federal government will step in and sort of impose sanctions of any varying degrees on Amazon in particular, who has a pretty strong hold across a lot of different markets. So that is a new kind of caveat to what could happen, but I think if we kind of keep it squarely in the sense of will Amazon spin off AWS as a business move, I really still don't see that happening just because of the financial benefits that have come from AWS being part of the Amazon umbrella. The Amazon retail business has been able to operate either at a loss on a quarterly basis or close to a zero sort of operating margin. And that is because of the profitability of AWS. And so while they're not directly related, AWS's profitability does enable Amazon to price more competitively on the sort of retail side of its business. Conversely, the scale of running the retail side of the Amazon business also helps AWS with scale derive greater profits, which again, kind of that cyclical feedback into enabling the retail business to operate at low margin. So I think, again, voluntarily, AWS will remain part of Amazon. Google, as Catie mentioned, there's a kind of a new piece of information within that discussion because of the 2023 ambitions that Catie mentioned to beat AWS and Microsoft in sort of the cloud race, as to phrase it sort of generally. Again, as Catie said, within our projections, we're not sort of seeing a path for Google to beat AWS and Microsoft in terms of sort of total cloud revenue on an annual basis. And with that, there's been a lot of speculation on what will happen to the GCP business, whether it will be dissolved or I think that to this question, it could be spun off to maybe one of the services providers who are partnering closely with Google. I mean, you can speculate in a lot of different directions there. But within 2020, definitely don't see GCP spinning out of Google or being dissolved within Google. I think that's a conversation to have out by as 2023 becomes sort of closer and we can really see the performance against those ambitions that they've set. Those are my thoughts.
Great.
I think they'll stay together for now.
One more question around differences we see in industry verticals from the vendor side and the customer side. I'll start. We can probably all jump in. I had mentioned earlier on that financial services and healthcare, we're actually, through our customer interviews, seeing more openness and plans to migrate to cloud. One interview comes to mind with a large financial services firm where the benefits of moving some of their modeling data up into a cloud environment to decrease cost and also perform analytics on that it's kind of a longer term modeling that they can spin up the queries once a day, get the results, and look at trends for that trading period. So use cases like that I think are becoming more common as we conduct those interviews. So it plays to kind of the compliance barriers breaking down for a lot of industries, including financial services.
Yeah, I think that's an interesting point. I mean, and I think less than sort of a specific industry that's going to see a big change. I think industries in particular and sort of industry use cases are becoming, not that they haven't been, but I think are even more so becoming really stronger drivers of cloud adoption. We're still hearing a lot of customers either deciding to sort of be a leader in their industry to make certain moves or investments in cloud, and a lot of the long tail of certain customers are choosing to wait for a bellwether or two in their industry to make certain investments or moves. And I think some of the newer technologies, or maybe not newer at this point, but those that haven't taken off, such as sort of AWS Outposts, things like that, I think there's a lot of sort of industry flavors that can be layered on top of the expectations for those products. And we'll probably start to see that flesh out in 2020.
Just to add one other industry in there, not always talked about, but the cloud-based gaming market, I think, is going to be something that is going to be taking off in 2020. Google has Stadia. Sony is now put PlayStation on Microsoft's Azure, and I think that that's really going to be an area where we're going to have developers start building for those cloud-based platforms. So I think that's an area to keep an eye on from the vendor and the customer side.
Mm-hmm.
I think there's one more question that just came in the queue, and it says, thoughts on any potential big acquisition moves from cloud hyperscalers, especially in order to challenge AWS per your earlier trend. For example, Google acquiring Salesforce. And I'll take a stab at this, definitely speculative at this point, but then if anyone else wants to jump in, feel free. I mean, clearly I think the conversation right now around what Google will do in the coming year and in the coming 3 years or so kind of starts with those ambitions we mentioned before about trying to beat AWS and Microsoft in the cloud space. I think when that was first announced, the clear conversation is around the platform and infrastructure layer, but as this question kind of poses, there could be an angle where Google acquires a very large cloud vendor like Salesforce, and then sort of by adding in that revenue base becomes as large as or at least competitive in terms of revenue with AWS and Microsoft. And it's definitely an interesting prospect. I think that there's some considerations in terms of the statements, and again, this has happened clearly years ago under a different management structure, but Google has been in the past pretty clear about trying to stay out of its ecosystem's way, defining its innovation avenues pretty clearly, kind of in contrast to AWS innovating into a lot of different directions that its partners may be in already. Google's been pretty clear, especially in the application space, on where they were drawing lines. I think the best example is when they launched it was either Google Hire or Google Jobs, and sort of the speculation around competing with Workday and things like that. Google was pretty clear about drawing the lines of this is as far as we're going to go in this avenue. We're going to leave the rest of the room to our partners. They haven't made as big of a stance in sort of the CRM market, so I guess Salesforce is still on the table in that regard. And so it's definitely possible, and it would be sort of a creative way, or I guess maybe not creative, but it would be a very straightforward way to get to the 2023 ambitions and really cement themselves as a cloud player, and it would clearly give them sort of the enterprise inroads at the application layer, particularly, again, if we're talking Salesforce. Those are a lot of accounts into which you can upsell some of the analytics and AI platform services that Google is really strong with to supplement some of Salesforce's existing platform business, and then clearly you'd get the scale of the underlying infrastructure. So I think my take is it's possible, but it's out there. It's a far-fetched possibility.
And the only thing I would add to that is that there's that speculation that kind of came around last month about Google wanting Google Cloud to surpass Amazon and Microsoft by 2023. And I think if that is a true topic that's on the table, a large acquisition the size of Salesforce might be a little bit of a big bite to chew, but definitely a possibility.
Mm-hmm.
Let's see, final question. Bearing in mind the increased complexity of multi-cloud, do we still see room for regional cloud players like OVH in Europe? Yeah, we absolutely do. I think it ties into a lot of the trends that we were speaking to around for smaller customers, mid-sized customers and down. The type of solutions they're looking to implement is a lot more than just public cloud service that they need to manage on their own and figure out the right use case and operate that on an ongoing basis. They're looking for more of a hands-on experience with high services attach rates and a local presence and industry expertise, those types of things that help them safely implement new solutions and get the value out of that. So it ties into kind of that middle ground of cloud that we see It's not as big market-wise for the public cloud solutions, but it's really important for that smaller tier of customer, and it's one of the business models that we see working for channel partners making the transition or born on the cloud, providers that provide high services attached, some packaged solutions for common functions, backup, industry solutions, those types of things, and can offer some dedicated flavors of cloud that are differentiated based on versus the multi-tenant options from the larger providers. So we definitely do see kind of a blossoming market for that middle tier of provider and customer to deliver value and have their needs met. Okay, with that, we'll hand it back over to Sarah to close up. If you submit any other questions, we will get back to you via email, and thanks again for everybody attending.
All right, everyone, if you have a few moments, it would be greatly appreciated if you could fill out the survey on your screen. A replay version of the webcast will be available after the event and will be sent out to you via email. To view a list of our upcoming and past webinars, please visit tbri.com. Be sure to join us on Wednesday, January 15th for Hardware Commoditization Pushes Vendors into New Ventures. Thank you and have a great day.